world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Clay Wilkes. Clay is the founder and CEO of Galileo, one of the leading digital banking and payments platforms in North America. Galileo provides much of the technology that powers banking and payments for companies including Chime, Robinhood, and Varo, plus the U.S. operations of Monzo, Revolut, and many, many more. In April, SoFi, one of the absolute leading U.S. fintechs and an increasingly full-service financial institution, announced the acquisition of Galileo for $1.2 billion. The tie-up will deliver, among other things, SoFi's full suite of lending products and balance sheet into Galileo's API platform, making them available to all of the customers Galileo supports. Already a dominant player in the U.S., Galileo is expanding into Latin America, where Clay sees a rich, emerging fintech market. For all of our past episodes, and to sign up for our newsletter, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Clay Wilkes. Clay Wilkes, welcome to Rebank.
Thank you so much, Will. I'm thrilled to be here. Couldn't be more excited. And great job. I am a huge fan of your podcast, and you're doing an incredible job. And I'm honored to be here today.
Well, I appreciate that so much. It's firstly, I think it's very much unwarranted. But we've tried to be consistent over the past nearly 4 years now. I think we'll
great.
Be up on episode 200 before too long, and it's just it's been fun. It's been amazing to watch the industry evolve from the earliest of episodes when I think we were still talking about Monzo in the UK on like a prepaid card stack, and now the world has changed and we've got $5 billion plus valuations for companies like Chime and Revolut. And not only is the industry taking notice, but consumers are taking notice, and we very interestingly find ourselves in the middle of a crisis which is forcing everyone to not simply reevaluate digital and the importance of digital, but really scramble to make sure that they are digital, and it's not just fintechs, it's incumbents and it's consumers driving that, and it's operating models and crunch points driving that. And the world has clearly changed. And this digital move, as we've seen in every single industry, only goes in one direction. And I think we're finally gaining some momentum in banking and financial services. Clay, maybe to kick off and provide a bit of context for the audience, you could introduce yourself and tell us about Galileo.
Absolutely. Galileo Financial Technologies was founded in Salt Lake City 19 years ago. We are a platform that is API-based payments provider, and we provide our services out to payments companies, fintech companies that are providing the types of services that are so much in demand right now. The COVID environment has absolutely done exactly what you said, which is pushed everybody into this where you don't want to be touching point of sale and touching cash and contacting the various clerks or merchants with the payment device. And so all of a sudden, digital is very much in vogue, but we've been doing it for a number of years and power not only digital banks, but digital form factors as well. And it's just been interesting to watch the surge in demand. We had an incredible first quarter, and it looks to be the second quarter is going to be every bit as strong. But I've got more to say on that. I'll save a little bit of it for your questions down the line. But Galileo's doing very, very well, going through very high growth right now, and I'm really pleased with where we are.
Well, look, there's so much to discuss. This is such a timely conversation, but maybe the best place to start has to be this pie chart graphic that's been going around a little bit. I'm not great at remembering specific sources for specific infographics, but I think this came out of some sort of digital banking report around app usage and downloads and
Right.
by proxy market share. And it was showing the biggest digital banks in the US by market share: Chime, Current, Varo, MoneyLion, and a number of others. And I think you shared it basically saying we're happy to be behind 95% of the market share in this graphic, which is phenomenal. Can you talk a little bit? That has to be the starting point. Can you talk about some of your highest profile customers? Can you talk about the market as it currently exists and Galileo's role in it?
Yeah. Well, first of all, I am familiar with that graphic, and when I saw it, it was a little bit of an eye opener. I can't think of very many industries where a single player is dominating to the extent of 95%. It's an incredible number, and it's not on small scale, as you noted earlier. These entities are not only receiving high valuation, they're doing it deservedly as they've scaled their own operations. So it's showing Galileo is currently powering in North America greater than 95% of all digital banking, which is an astounding number. But what's interesting, and even more interesting than 95%, is that as I look at where we are, we've had a number of clients that have been doing this for a little while, and they certainly are represented in that graphic. But we've signed up many of the leading fintechs. So TransferWise, you mentioned Chime, Aspiration, Greenlight, Robinhood, Monzo, Current, Scale Factors, SoFi, Varo, Revolut, Remitly, Coho, Shipped, PaySafe. The list goes on and on. So as I look out 2 years, 3 years, 4 years down the line, as these operations begin to hit scale, and they will, because they've solved for interesting and important problems, and they're getting market acceptance, Galileo's business will continue to scale. So that's exciting. To your earlier question on what about the time right now, what I would say about it is it's not limited to fintechs. Just within the last 4 to 6 weeks, we have had 3 of the top 20 global banks reach out to us inbound and essentially say, will you help us solve our digital banking problem? There's been a few of these experiments that have been launched and have not fared well in the marketplace. I won't name them. But I think what the banks have realized is that, look, if we're going to do this, we can't do it on the tech stack that we have. We have to do it in a way that these other sort of more innovative, more nimble companies are able to do it. And Galileo provides the infrastructure to be able to do that. It's not just the APIs, but we provide all of the middle office and back office support so that we can launch a company and we can either outsource or partner and work with that company to get these products quickly to scale. So we're seeing massive opportunities. It absolutely has not slowed down at all. If anything, it's grown very dramatically during this shelter in place and COVID experience.
Yeah. So you talked about digital banks there. You named then a number of companies in terms of the newer, it sounds like, customers that weren't maybe looking to offer the kind of full suite of consumer finance products. And then you talked about incumbent banks reaching out. Clearly, Galileo has a sweet spot in that digital banking space, but it sounds like there's some interest and perhaps some existing clients who are more in using card processing, using payments, using other functionality for reasons that aren't user, please use me as a primary checking account. Like, are there brands who are using Galileo in interesting ways? Are there other clients who are using Galileo in interesting ways other than the checking debit plus type offering?
Yeah, it's a good question. And the answer is absolutely. The platform is flexible enough to be able to accommodate really anything that you want to put your imagination to. And we do that today. We do that, for example, with companies that are in the B2B space where you're making a payment down the payment rails to some other commercial entity. So commercial applications. We see it in teen and parent type configurations. We see it in things like gig economy engagement type applications. We've had a number of those. We've got a lot of instant payments that we do today that are essentially one-time payments. And I'll talk more about that later. When that comes up, we've got a major initiative in that space. So there's a variety of these things. Wealth management, in cash management, had an enormous surge of interest in asset management and wealth management companies wanting to be able to offer banking-like products out to their customer. And Galileo is able to quickly, easily offer those types of capabilities because we've been doing it. It's essentially what we do, integrate with their core. I'll give you a small example. If a very large bank were to come to us and say, hey, we want to launch a product that's going to have 5 million, 10, 15 million customers, we could do that and consume 4 to 6 account entries on their core banking, and the entire thing would run with full compliance capabilities and really solve every regulatory concern, all of this operating at scale. There's just a lot of capability that we've built that allows us to be able to do that.
That's probably an interesting point to dig into a little deeper and maybe pull in some of the history. So please correct me if I'm wrong, but my understanding is that Galileo was more of a, strictly speaking, payments processor earlier on, and then in recent years, you've extended the platform, expanded the offering to support other types of products and services. And I think that a lot of the Galileo maybe heritage, especially if we refer to that pie chart, some of the players that have significant market share there, and I think indeed a number of others who maybe weren't on that chart, or Galileo customers via a Bank Corp and Galileo arrangement. And perhaps you've traditionally had a close relationship with Bank Corp, who was one of who kind of is the grandfather of sponsor banking. Can you talk a little bit about where Galileo has come from, how you've built your niche, and then how you've extended into further offerings over time?
It's interesting to look at a history of the payments networks or associations. Both Visa and MasterCard tried to define traditional credit. A further extension beyond that was what we know of as traditional debit. And then beyond that, it was sort of like anything else. They didn't know where to put that anything else category. Both of them in the early days called that something else. It was prepaid. And the interesting thing about that is that no one particular business model that we were providing services for fit the mold or the model. In other words, with traditional credit, this was a walk-in customer or later on a monoline customer that was being an issue a card by a bank. A debit card was essentially a walk-in customer that was receiving a debit card allowing them to access their DDA. These other things were non-banks, and they were all over the place. So you might have a product that received a state or federal payment, but it could have just as easily been a gift card. It might have been a payroll card. It could have been a tax remittance card. And it could have been any one of a number of 100 different things. And so it was in that environment that Galileo was trying to solve those problems. And we knew that the platform needed to be created differently from an architectural perspective and deliver those services differently when it came to the integrations. Because not only did we need to know something about payments, we needed to know something about the business logic that was on the other side. And it was a very diverse set of applications that we were solving for. So that's the heritage under which Galileo came about. And it's one of the reasons why we're able to adapt so easily into these different environments.
How much of an accelerator has the Bank Corp relationship been over time? And do you expect that to continue to be?
Bancorp has been an important partner for us, but they're by no means the only partner. They're one for us today of about 20 different banking relationships that we integrate with and partner with. We've got in North America, we've got about eight to 10 of the card manufacturers and personalization entities that we're integrated with. Most of the payment networks and applications that you're essentially integrating with in terms of riding the various rails or moving money about, we're integrated with nearly all of those capabilities. So the bank partner is just one of the factors. BankCore has certainly been a longstanding partner and an important partner for us, but by no means the only.
It sounds like what you were describing before, what you could do for an incumbent bank, was something akin to an FBO structure. That suggests that your technology platform can not just interconnect with various payment networks and do the payment processing, but perhaps run the ledgering and accounting and effectively serve as a core banking type system as well?
Well, you really hit on what is at the core of our system. Our system is an account based platform or capability, and that account for us is structured differently than it is on nearly every other payments platform that I'm familiar with. For us, it's a control structure, and off of that hang these other important dimensions of the services that we deliver. And so it allows us to achieve things such as the one you were just mentioning, where we can be either the primary or subledger in any one of a number of different environments or applications. I mentioned cash management as an example, but it's just as easy in digital banking and potentially just as easy in say, stock trading or securities trading as it is in delivering a payroll card. So the capabilities of the platform at its very core, there's two fundamental things. One is the hierarchical nature of the configuration. And without going into that too deeply, it allows us to organize information. So think of the file system on your computer. It allows that type of configuration. And then the other key construct is this account. And again, it's not an account like, Will Beeson, he's lives at this address, et cetera. It's not that. It's this control structure that's really core and fundamental to what we do.
So because of the richness of that structure, it sounds like the sponsor bank who's sitting behind a Chime or until further notice Varo and Current and a Monzo in the U.S. and N26 in the U.S. In the event that fintech is working with Galileo, the sponsor bank is effectively providing a banking license, capital, FDIC coverage, more of the regulatory approvals and less of the technology and functionality, which comes from Galileo. And that kind of then suggests that if you strip out the sponsor bank, what you effectively have is like a digital wallet stack. And the digital wallet, I think, is a fascinating space that we're starting to see emerging a bit more. Square Cash has, I guess it's called the Cash App. Square's Cash App has attracted millions and millions of users in recent times, and I think the stimulus checks from the U.S. government were an accelerator for further customer acquisition. In all effects, nearly, it's similar to a digital bank account. I'd be curious to the extent that you're working with anyone who's approaching this from more of a wallet structure as opposed to a full sponsor bank structure, what your views are on the digital wallet space as we look forward versus the kind of full stack digital bank.
I think you're going to see a number of players win in that space, and I think they're going to be important. So you mentioned Square. I think for sure they've got an opportunity. PayPal absolutely has an opportunity there, as do Samsung, Google, Apple, some of the larger tech players. And we will see for sure, we will see large scale adoption with those types of technologies. And Galileo is able to power all of them.
I think the other topic of great relevance right now is the very recently announced SoFi acquisition of Galileo. Congratulations.
Thank you. It's exciting. I actually couldn't be more excited about not only where we are, but what it means for the future of the industry. And I'd be happy to share at the right moment the rationale for why we did it.
Absolutely. I'm very, very curious.
Galileo's had, as you mentioned, at the outset, a 95% market share in banking and payments, very strong in debit and card-based applications and the like. And we will continue to see market share expand, we believe, and think that Galileo's presence in that market is critical. SoFi, on the other hand, has been an incredible company in the lending space. And they've raised an incredible amount of money, and they've built a business around personal loans, student loan refinance, mortgages. They're getting into credit card right now, and they've got adjacent businesses in investment and their SoFi Money product. But the core of their business is this lending space. And so the rationale was, what if we could take what you, SoFi, are currently delivering in a consumer experience out to your member base? What if we could take that and wrap our enterprise grade APIs around it and deliver it out through Galileo's distribution? What would happen? Well, what would happen is you would immediately offer products that every single one of the clients that I mentioned earlier in the program have on their roadmap, have in absolute demand, are trying to find urgent ways to get to those products, are wanting to take baby steps that's going to require them to really build out this capability over years. And we could potentially offer these products at scale in ways that would probably give Galileo a 3-year, maybe 5-year head start on anybody else that would be on the scene. So the rationale was, could we define a juggernaut of payments by bringing these two companies together and delivering these products, banking and payments on the one hand, and credit products on the other hand, in creative product constructs that all of these companies are really wanting.
What types of products does it include that Galileo doesn't currently support?
We would do personal loans. We could do student loan refinance. We could do home loans. We could do credit card. I should make a footnote on credit card. We already provide a number of credit-related products on our platform, but we are launching true consumer revolving credit, and having the ability to be able to deliver that in a white label type of environment today has been difficult. The sponsor bank relationship is difficult. Finding the right platform is difficult that is not legacy based. Being able to do that in an API environment is hard. So being able to bring that together with what I mentioned in terms of what is really at the core of SoFi, this digital securitization pipeline, that the opportunity is massive beyond belief.
We talked to Ryan King from Chime, one of the co-founders, on the podcast probably last year, about a year ago. And I remember he was telling us that consumer credit was on their roadmap eventually. So the big question here is, does Chime view the SoFi ownership as so competitive that it doesn't want to work with Galileo anymore, or does it view the opportunity to leverage that new functionality to deliver consumer credit as being so beneficial that it's a turbocharger for that relationship?
Yeah, Ryan King, first of all, is amazing. He's fantastic and long-term partner. We've been out now and talked to every client that we have, and the combination of SoFi and Galileo has been met very enthusiastically. And they are, just as you say or suggest, they are very excited about the possibility of being able to deliver credit products that would come from this combination. So it's not just banking and payments, but a number of very exciting lending products. All of these clients of ours today have these lending products in the roadmap. And so that's one of the reasons why I think it's being met so enthusiastically. The other thing that I would say about it is what's core to the function that we provide to every client that we have is privacy and security. But that privacy, whether you're talking about customer data or you're talking about strategies and product roadmaps and the like, are key. And we do it today already. So we provide services for Robinhood as well as we do for Chime. And we're not at liberty to talk about what Robinhood's roadmap is when we're talking to any other client. So this is a key function of what we do, and that will carry forward to our relationship with SoFi. Galileo is a standalone business. We'll continue to build a standalone brand, and the model that we're really aiming for here is been proven in the marketplace. So you've got this incredible consumer brand, Amazon, and there's a tremendous infrastructure company, AWS, or Galileo in this case, and it's providing services to Netflix, who is Amazon's biggest competitor. And that model works perfectly. So we see this working in the marketplace today at scale, and we think that it works here. And we think it works because we're actually providing a significant advantage to our clients in delivering product sets that are not going to be available in the marketplace for some number of years.
You talked about roadmaps a few times in there. And I guess the question that's coming to mind for me is specific to SoFi. I'm sure you'll tell me you don't have visibility or you're not at liberty to discuss. But I think SoFi maybe applied for a banking license or was thinking about applying for a banking license and didn't. It seems to me like if they pursued that again, if they got a banking license, then basically the SoFi is sponsored bank plus Galileo would suddenly offer a phenomenal banking as a service, full stack bank, fully regulated banking as a service offering, and not just a replacement or a competitor for others, but perhaps the most modern, the most purpose designed, purpose built in the market right now. That sounds like it would potentially be a huge opportunity. Any insight into that from where you sit?
Well, I think what you're speculating on is very, very interesting and compelling, but I don't have anything that I can share directly, and I don't disagree with what you're saying. I think it's an exciting future. That's what I can say.
Well, maybe we'll see if we can get SoFi on the podcast at some point and ask them the question.
Anthony would love to come on, I'm sure.
Are there any exciting products that you're working on now as you look at how to continue to adapt to this rapidly evolving space?
There's a few things that I'm excited about. One of the most immediate is our expansion into Latin America, and we see that as a tremendous opportunity, equaling that of North America, both in terms of its the number of consumers, the types of payments, the adoption, the digital form factor. All of that is just almost a leapfrogging of what we've seen in North America. One of the products that I'm really excited about, and we announced it late last year, we're just now bringing it to market, is a product that we're calling Galileo Instant, and it will serve a slightly different segment of the market than what we've traditionally done with fintechs. So this is the way that Galileo Instant works. It's eliminating all of the headache, and we demonstrated this in a closed setting of executives, where we took what typically takes anywhere from 3 to 9 months, maybe longer, maybe a year, to get a full product out to the marketplace, and we collapsed that down to 23 minutes. And it was the onboarding, it was the funding, it was the KYC, it was the KYB, it was everything that you would typically do, but all of the pipes were already built. And Galileo Instant allows companies that simply want to make a payment, but don't necessarily want to be a payment company, to do it and do it very quickly. So these are marketplace, gig economy, e-commerce type businesses. I have a neighbor that runs a very large steel company, and he has 10,000 welders. And he came to me several months ago and said, "Do you have a product that would allow me to pay my welders by the weld every day?" And I said, "Well, if you'll give me just a few months, the answer to that question is yes. We do have such a product, and that's Galileo Instant." So in that setting, his welders could come, they could do the number of welds they do in a day. The supervisor could check it off and the payment happens immediately. But those opportunities are all around us. And it doesn't matter whether it's Google wanting to pay a YouTube influencer, and there's 23 million of those, and they need to pay them regularly for all of the ads that are running in their various videos, all the way down to the welding application or the individuals that are delivering packages in New York for law firms. So we believe that the opportunities are all around us, and Galileo Instant will serve a very important purpose and exciting purpose going forward. So that's one of the things that I'm most excited about right now is delivering that product. And we've had 450 companies on the backlog, and we've just now this week began releasing those out into the market.
Oh my gosh, I feel like I need a couple days now to just digest that and think about what the implications and use cases are, and then we should have a whole nother podcast to talk about it. Wow!
If you'll have me back, I will happily come back and talk about Galileo Instant, and we'll have a little bit more road experience when we come back and do it. But I can tell you the opportunities here are vast, and it's going to.
That sounds like a fun brainstorming session.
It's going to transform payments a lot.
Impressed and taken aback as I am by the Galileo Instant offering, which sounds extremely powerful. I don't want to not pick up the first point which you mentioned, which was the expansion into Mexico and Latin America. How different is that market from a pure infrastructure connectivity perspective? How much work is involved in launching there? Is it akin to building Galileo 2 in a completely different environment, or is it easy enough to extend the geographic functionality without recreating everything?
Fortunately, the platform is from the configurations I was talking about earlier, at the core, the account and the hierarchical organization, what's at the core of what we do. The platform is adaptable enough that we can go into a geographic region such as Mexico. The things that you begin to think about are certainly currency, but we operate in all the world currencies today. Being able to silo those, being able to integrate with whatever the local regulation or banking requirements are by the central bank and others, and then being able to integrate into the payments network, and they may vary. And then you've got integration into the local, potentially central bank or other funds flow and ATM type networks. So those are requirements. As we move into Latin America, each of these countries, so whether it's Mexico, Colombia, Argentina, Uruguay, or Brazil, or other, they'll all have their own local version of that. Then you've got language that sits on top of that, and various, for example, address formatting. As we move into Asia Pacific, you've got multi-byte character set, Unicode types of things to think about as well in terms of characters. And so there is work to do, but 90% of what we do at the core moves over. So while we have to do an integration and a certification in the local market, a large part of what we do, and certainly as we are interfacing with our clients through our APIs, that is all working as you would expect. So the answer is it's largely movable from region to region, but there are some local things to think about.
Wow. Well, I think that when SoFi starts offering balance sheet to Nubank via Galileo, my head is going to explode.
Yeah, we'll see how far away from that we actually are. But of the top 20 opportunities in the Latin American region, we're talking to all 20. And we've only been there a month, and we've signed 5 of them. So we think the future is extremely bright in Latin America.
Well, I think there's again a third episode right there around the fintech landscape in Mexico and Latin America, and I actually have a few people in mind who could step in, and we could have a multi-party conversation that could be really good.
Love to.
Before I let you go, I have one question, which is switching gears a little bit, but I just feel like you may be well placed to tell me a bit about your thinking. So the real-time payments system
Yeah.
in the US that's kind of been talked about for years, and which is now, maybe it was moving forward and maybe now it's going to take longer, and question marks about entrenched interests and kind of what's going to happen and who owns it, who it's going to work to the benefit of. What are your thoughts about that real-time payments network?
It's an area of the payments network that absolutely needs to be modernized, 100%. I'm a huge fan. I don't know the timing. I hear all the reports and see all the reports. In fact, we're quite close to it. But I don't know, when it actually comes onto the scene as a fully commercialized opportunity. And then what does it change and what does it do? I think it's going to be an evolution to get there. I don't see it like, okay, on 2021 or 2022 or 2026, it's going to change anything. I don't see it happening quite like that.
That's too bad. But hey, we'll get there eventually, I'm sure. Clay, congratulations again on the SoFi acquisition, and thank you sincerely for coming on the podcast. Galileo is far and away one of the most impactful fintechs. I think your vision when you were setting out nearly 2 decades ago was phenomenal, and it's the world has unfolded in a way that kind of confirmed, I imagine, a lot of your early thinking. Amazing work, and look forward to watching you continue to excel and support this industry moving forward.
Well, thank you. Thanks for having me on the podcast. Really appreciate it. Great chatting with you.
Clay Wilkes, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.